we dive into it.
Okay, should we formally call the meeting to order or not yet? All right, why don't we call the meeting to order? Well, I guess one more minute maybe, right?
I have a question. If someone can help me, can you hear me okay?
Mm-hmm.
Okay, I had this problem before. It says live transcription closed captioning has been enabled. Do people know? And it's really destroyed my viewing in the past with different things. I'm not quite.
So are you trying to dismiss the notification that the live transcript is enabled, or are you trying to get rid of the live transcript?
I want to make sure. Well, I'm not getting it now.
Okay.
And I want to make sure that I don't get it because I hear you all just fine. And so it just says at the top, live transcription, closed captioning has been enabled. This is who can see this transcript recording on. But then under live transcript, it says, I'll say full view, full transcript, subtitle settings. I'm not sure.
Right.
You can close that field, Francesco. You can close that field. You see where the X is at the end of that?
Yeah.
If you just click on the X, it will close that field.
Okay, I closed it. I hope it works. Thank you, Judy. Because it's.
Okay, great. I think everyone's here now. So let's go ahead and call this meeting to order. It's 5:01 p.m. Maybe before we started, we could just take a quick moment to welcome our new member, Luke Panzar. Welcome, Luke, to the committee. And we just had discussed, perhaps we could just spend just a minute apiece introducing ourselves to you and you to us so that everybody knows who everyone is. My name's Kim Trainer, Albany resident, and this is the first meeting of our second year of our term. So this is the first meeting where I'll take over the chair duties from Judy Kerr, and then Mark Priven will be the vice chair. So we've all served on the committee for one fiscal year at this point. And I'm coming from a finance and audit background. I'm a CPA. I have a small accounting practice located in Kensington, and we focus on nonprofit accounting. So it's a little bit like governmental accounting in terms of the fund accounting aspect. So maybe we should just go around and have everyone introduce themselves. Mark, would you like to introduce yourself next?
Sure. Hi and welcome, Luke. Is that right? All right.
Yes.
Well, welcome, Luke. I'm Mark Priven and longtime 25, 30-year Albany resident and professionally an actuary. I don't work professionally on pensions. I work more on like general liability, workers' compensation. So I sort of come at it from that angle. And it's been a good year on this committee. I think we've all learned a lot, and looking forward to your participation.
Member Papalia?
Hi, I'm Francesco Papalia. I'm a 30-plus year Albany resident and worked in real estate as a realtor for over 30 years here. I come to this from a keen interest and understanding of how real estate taxes have driven our local budget and how taxation is, where I'm working on with Member Kerr on a subcommittee that has to do with revenue, increasing revenue. And so I'm kind of, I'd love to hear what you think or what your background is. How long you've been here, and actually a little bit why you wanted to be on the committee, which we're thrilled to have someone to fill that slot. And there has been, I think the first couple meetings was Heather did a really good job kind of explaining the budget if you're not familiar with it, because it can be very, very difficult to understand. And I'm trying to figure out a way to communicate to the general public how the budget works in everyday English. And it can be hard. And I'm just kind of getting past the hump in understanding all the different reports and what's a biennial and a budgeted and estimated and all that stuff. So good luck. Thank you for joining.
Those are great questions. Member Kerr.
Welcome, Luke. I'm Judy Kerr. I, like the other members, have just been on since we were sort of incorporated or brought in on board as an advisory body last year. My background is not at all in finance, to the extent that I'm not a finance person, but I'm a retired nursing administrator. So my budgeting experience is in healthcare. So if you want to know how to bill for a broken hip, I can talk to you, but I'm learning, my learning curve has been pretty intense in terms of understanding municipal finance. I wanted to be on the committee because I wanted to learn, and I have learned tremendously. So I really appreciate the support of Heather and the other committee members who really know a great deal about finance and who I'm learning from. So my voice on the committee really is as a member of the public. If you wanted to test drive, could the public interpret that financial statement or that commentary? I probably would be a good test for that. But welcome, and I'm glad you're here.
Thanks, everyone. It's good to be here. Luke Panzer. I'm a 9-year Albany resident, so I guess I'm sort of brand new compared to most of the rest of you, but gotten really comfortable here. This is definitely home. Part of the reason I wanted to had to get onto this committee is that I don't see myself leaving anytime soon, and I want to contribute somehow to the community. I'm a practicing attorney. I'm sort of trying to transition out of being like a litigator into more of a policy focus. I actually just finished a master's in public policy. And my main interests are budgeting, obviously, and the financial government finance, but also housing and transportation and the environment. So obviously the numbers back up all that stuff. So part of the reason I wanted to be here was that I'd sort of get a little bit of information about just how all the government works, not just one piece. And yeah, I'm excited to be here. I have some coursework in accounting and finance, but it was a long time ago now, and I don't really have any practical professional experience there. So my learning curve is going to be a little bit steep too. And I might spend most of this meeting listening, but I'll pipe up with my thoughts and suggestions where I can. And I'll do that more and more as we go forward, and I'm more familiar with everything. So thanks again, and I look forward to participating.
Great, thank you. We're happy to have you. And I think I need to read the land acknowledgement statement before we get going. The City of Albany recognizes that we occupy the land originally protected by the Confederated Villages of Lisjan. We acknowledge the genocide that took place on these lands and must make strides to repay the moral debt that is owed to this Indigenous people, specifically the Ohlone tribe. We thank them for their contributions, which have transformed our community and will continue to bring forth growth and unity. The City of Albany commits to sustaining ongoing relationships with the tribe and together build a better future for all that now make this their home. So with that, that's item number 1. Item number 2 is approval of the minutes, but I understand they're not posted. Is that right?
That's right. So we're going to hold them for next meeting. So we don't need to do that vote.
Okay. So I guess we need to do roll call then.
I'm going to consider your introduction roll call.
Okay, great.
You're all here.
Excellent. We're all here. So the third item on the agenda is announcements, and this is the spot where staff or committee members can make announcements, I guess, that are not agendized for current issues. Okay, so I guess there's nothing for item number 3. So then item number 4 on the agenda is the public comment period. Do we have any members of the public attending?
We currently have one attendee. If they can raise their hand if they would like to comment. I don't see any hand. Oh, I do see a hand. All right, let me see if I can do this. Jeremy, are you there? I don't have, there we go. Thank you. All right, Mr. Bone, if you'd like to give your public comment.
Thank you very much, committee. I appreciate you having me here. I sent a letter in yesterday. I don't know if it arrived. It's in your packet. For the sake of brevity and respecting your time limits on my comment and your meeting, I know you want to get out of there. What I sent in the letter really explains it all. So if you could look at it, or if you haven't, I would appreciate it. Those are my comments, and I think I can check out now if you just accept the letter. Thank you.
Okay. Thank you, Mr. Bone. We did receive that email, I believe, yesterday. So it was outside the 72-hour window for posting for public comment for this meeting, I believe. So I think the appropriate action is to put that on for discussion at the next meeting. Is that right, Heather?
I think we were able to post it.
We were.
Yeah, it's just public comment, so it went under the public comment section. If you get it in, I think it's before 5. Well, I mean, this meeting was at 5, so if you get it in earlier today, we would have been able to put it on the website. And since it came in yesterday, we were able to get that up.
Okay. We did get that letter, and thank you for your comments. And I think a lot of the items that you brought up in your letter will be discussed as we work our way through the agenda this evening. Did anybody else have anything else they wanted to add with respect to the public comment? No. Okay.
I'll just say I didn't get a chance to see the letter. So as we go through the agenda, if there's things that are in the letter that pertain to it, if somebody could either say that or whatever, that'd be great. Okay.
So I think it's time to move on to item number 5. There are 2 presentations that Heather will be doing to discuss audit overview and local ballot measures. So I'm going to turn it over to her at this point.
Well, I am going to apologize ahead of time to our newest member because this is one heck of an item to jump in on. But we are going over last year's audit. Now, this is for fiscal year 2020-21, which ended June 30th, 2021. So we're a year out and we're currently working on our fiscal year 22 audit. But the fiscal year 21 audit was presented to council in February. It wasn't done for the February meeting, and I didn't have a chance to put it on your May meeting because there was a number of other things on there. So so now is the chance to go ahead and review the audit. And it'll give you a good overview so that when the 2022 numbers come out, you know what you're looking at. Some of you are very familiar with this, but some of you may not be, and the public may not be. I know that when this was presented to council, a number of the comments were basically, can you make this easier to understand? And the answer is sort of. I can do a lot of explaining, but the financial audit is very detailed. We do adjustments under what the Government Accounting Standards Board or GASB requirements. There are over 90 something GASB notes at this point. So this is a full-time job. It is, I will do my best to make sure that everyone understands it. The management letter is there to give context to a lot of the numbers that are presented, but it is complicated stuff. And as you know, it is a long report. So I'm going to go ahead and share my screen. Let's see if I can find what I'm looking for. Okay. So everyone sees the City of Albany's landing page, correct? Okay, so all of these reports are available online, and it was pointed out to me that some people might not know that. So if you're looking for either the quarterly reports or any of the old audits or anything like that, you're going to go to the City of Albany's website, you're going to go to departments, and then right here under Financial and Administrative Services, you have budget and financial reports. Now, almost anything you could ever want is right here. We try to post everything that, that we have access to. The last time a single audit was done was in 2009. A single audit is a review of federal programs, so programs done with federal money. And you don't need to complete a single audit unless you have over $750,000 worth of spending for federal funds. Now, I'll get to that later. But so we haven't needed to do that since 2009. We have our Transportation Development Act financial statements. We've been holding off on spending this money, and for a larger project, we only get a very small amount. We have compliance reports that we're required to do every year along with our audit. We do them for Alameda County Transportation Commission. We get road, street and road funds, bicycle and pedestrian funds, and paratransit funds from Alameda County, and we have to track them separately and do they call compliance reports. They're detailed reports on what we spent the money on, whether we allocated interest correctly on any fund balances that we have. So that's Measure B and BB, which are sales taxes, I'm pretty sure. We get that again from the county, and then the county vehicle registration fee is again used for street and road type things. So everything you could ever want to know is right here. So our basic financial statements and annual comprehensive financial reports. The annual comprehensive financial reports, the reason I added basic financial statements here is because for 2017 and 2018, we did not complete the full annual comprehensive financial report. We did present basic financial statements. They're both audited. It's just the annual comprehensive financial report includes additional information, including statistical information in the back about the city. And also it includes the management discussion and analysis letter. So I'm going to open the 2021 audit. And okay. So as you can see, it starts with a table of contents. The transmittal letter is simply just the city staff presenting the audit to council. We have an organizational chart. And now it's important to remember that this information is for fiscal year 2020-21. There we go. So some things may have changed since then. This is a snapshot in time. One of the questions that I got specifically on this one was that the organization chart still has the library board on here somewhere. Yeah, there we go. Still has a library board. The library board was shut down in the middle of that fiscal year, but it's still on here because it was in effect during that fiscal year. We go over the principal officers, department heads, and a wonderfully colored map of the city. And then you get into your financial section. You have an independent auditor's report. The auditor talks about whether they thought that our financial statements were fairly presented, which means that we didn't make any, we didn't lie, I guess. But all of the procedures that we used and all of the items that they sampled were correct in regards to city policies and were posted correctly, were in the right place, things like that. So they said that we had, fairly represented financial statements. It talks a little bit more about, what's provided in the annual comprehensive financial report. And then we have the management discussion and analysis. As I said earlier, this is really management's discussion of trying to put context to some of these numbers. Why did things go up versus down? What does that mean? I'm going to skip through this because we're going to do that together today. But if you ever have questions in the future, you can go back to this and read through it again if you'd like to. It talks about, what different things are. We have governmental funds, we have proprietary funds. Basically, one's funded with taxes, one's funded with fees. We have fiduciary funds, which is our pension fund. All right, let's skip through. Close your eyes so you don't get seasick. Okay, so our basic financial statements, which basic financial statements are part of the annual comprehensive financial report. So one of the first things that you're going to see is a statement of net position. This is something that would be familiar to both governments and anyone else who does accounting. It shows, the things that you have, tangible things. So you have cash and investments, which I suppose they may be electronic, but that's still tangible. You have, capital assets. So our buildings and our equipment and all of that. So this talks about all of our assets, and you'll see there's a year over year in on another page. You'll see often, that your net position will go down. Here, let me see if I can find the comparison. I don't want activities. This is a very large report. I don't know where everything is off the top of my head. Yeah, I'll go back to the first one. So net position beginning of year, net position end of year. So there we see where we were when we started, where we were when we ended. Oftentimes people will be like, oh no, it went down. It's not, some of these things are very much accounting wise. When I was talking about, the things that we have are tangible assets up here. Well, they also include depreciation, because the value of an asset is squishy. So you pay cash originally for that asset. And we're going to go back to accounting 101 here. Ready? You pay cash for an asset and you put that on your books as this asset is worth this much money. Mm-hmm. You assume that over time, that asset will be worth less money. You're going to put wear and tear on it. You're going to, have to replace things, whatever. So you say, I think this asset is going to last so many years. For a vehicle, it's generally 5 years. For, some other things, it might be 10. Fire trucks, we think they're going to last 15 years. We hope anyway. And so we take the book value, what we paid for that item, we divide it by however long we think we're going to have it, and we take some of it off every year. Now, that is a number that we put on a piece of paper. It means nothing for necessarily, if I needed to sell that thing tomorrow, what am I going to get for it? But people want to know what the value of the items that the city has are. And that's included in, it's our best estimate for, you know, what the value of everything that the city owns is. So if our net assets go down, most of it's because we didn't buy a fire truck this year. Well, we bought a fire truck this most recent year, so watch out, it'll go up. But, you know, your net position, I've had debates with other financial people about this. And in a private corporation, it's very important. Your shareholders want to know what is the value of everything that you are. For a government, personally, this only matters to me if we were going to shut down tomorrow and sell everything. And we don't really plan on doing that. So, you know, this information really tells you, are we maintaining our assets? Obviously, cash is, you know, do we have cash? Is it going out? You know, you can get some information from this, but really the bottom line is, you know, when you get down to the next page and you see that our net position lowered, I wouldn't panic. You really want to get into the why. Is it just depreciation? Are our assets fine? Then it's not a big deal. Is it just depreciation, but we haven't replaced our assets in like 10, 15 years? That might be a problem if we, you know, need to replace them and don't have the ability. So, you know, the net position, you really have to take line by line and figure out what are you doing with it. So that's your first part of your basic financial statements.
Can I ask a question?
Yeah.
So can you just explain how pension assets and liabilities do or don't flow into this statement of net assets?
I think so. Let me find them here. So we do have a total liabilities section. And so we have our net pension and our net OPEB liabilities. This actually changed mid-2010s. Cities didn't used to have to put this on their financial statements. When it started to become a problem, then there was a Government Accounting Standards Board bulletin or whatever they are put out. And governments had to start showing their pension and their other post-employment benefit liabilities.
But can I just ask for a quick, this is the net number. There's actually assets. This is the amount that we're essentially a shortfall, the unfunded liability.
Yep.
Right. So there's a bunch of assets and the liabilities exceed those assets by 40-something million dollars.
Correct.
It's not actually, the total assets aren't above it and the total liabilities aren't.
No, they don't track it that way.
Okay.
We do track it that way. Well, we do report it that way for our closed single payer police and fire pension fund, but that is in a different place. This is broken down by governmental activities and business type activities. The fiduciary fund is in a later section of the annual comprehensive financial report.
That's fine. That's clear. Thank you.
Susan, can you hear me?
Yes,
Yeah.
I can.
Okay, so I didn't understand. I got confused. So that 43.
Nope, you muted yourself. There we go.
Can you hear me now?
I can, yeah.
Okay, so the 43 million and the 5 million in fiscal year 21, that's a net. So that's the unfunded pension liability.
Correct.
And that adds up to 48 plus. Is that correct?
Correct. Yes.
Okay, but at the city council meeting, that this issue kind of came up, and I thought I heard you say that the present one is around 37, and then in the report that the subcommittee did, they gave a number of like 40 or 43. So that can you give us so that was 21. And so when we say year 21, we're always saying the year that ends June 30th, correct?
Correct.
Yes. I'm going to manage that lingo. So fiscal year 21, it was 48 million, and now it's gone down.
So the subcommittee only looked at this line. They did not look at the other post-employment benefit line.
And also, it was June 30, 2020, not 2021.
So the pension liabilities change. There's a new valuation done every year. And depending on what assumptions are used, depending on how the market does, depending on how many people die or retire or all of these things, that number will change every year.
Right.
There's some part of it that we can really plan for, and there's others that we have no control over.
I just wanted to go back and make a quick comment or question, I guess, about the fixed asset section, the capital assets.
Yes.
So these are listed at historical cost and net of depreciation. So these are historical numbers. So any parcel of land or buildings that would be on that land, this is the historical cost net of depreciation. So probably with respect to land and buildings, this represents an understatement of the value.
Correct. Yeah, we're not revaluing.
Right.
Because that's just for insurance purposes.
Sure. We insure for the value, but, like if, Heather made the comment, if we had to go out and liquidate everything today, we would actually get more than this because the land and the buildings are almost certainly worth a lot more than historical cost.
Right. And again, that's one of the ways that, a private company versus a government fund statement will differ. The private company wants to make sure that they're showing the best numbers that they can. They're going to get that valuation. They're going to put on here. I do not have time for that. we do not have time to get that done. And I mean, unless we're planning on selling City Hall, it doesn't really change anything.
I would imagine it would be different. It's probably similar for governmental accounting as it would be for GAAP accounting. If it's a fixed asset that's held for use in the business as opposed to an investment held for sale, you're not marking it up. You're just carrying it at historical cost because it's not being held as an investment asset. And that's just those are the rules for accounting for that. So we're not going to go through and revalue that. But I just thought looking at that, I wonder, how much more all those properties are really worth than what we carry them at. A lot, I'm guessing.
Yeah, I'm trying to think if anything on there is even really on there anymore. I'd have to go back through. The land on the fixed asset listing is not my biggest worry every time we do.
Right, and the land is probably the non-depreciable line item, right? The 11 million.
Right.
So, I mean, the land, I'm sure is, is worth a lot more than 11 million.
Yeah, because the only business type activity we have is the sewer. So your sewers are worth way more than 2.4 million at this point. So. Any other questions on this? All right, we will move forward. So again, this talks about what governmental funds are, our general fund, our street and storm fund, and other small funds. We have, our pension tax override fund, our ENS fund, our all our tax funds, our governmental funds, their special revenues, we have to track them separately, but they're not large enough in and of themselves to list them all separately. So our balance sheet, again, we have assets and liabilities. It breaks it down a little bit more from above, from the governmental funds. It talks about, it breaks down the general fund versus the street and storm drain fund, and then everything else. It then talks about fund balances. Non-spendable items are, prepaid. So we prepaid for software. We got a 5-year license, and we already, paid the cash out. If for some reason we stopped that license, they would owe us money, but we don't have the cash anymore, but technically we can't spend it. So, but it's technically still not an expense. And then it talks about, restricted funds. So things that have to be spent for very specific purposes. And then assigned is items that at any point in time, the council can reallocate to other things. So these are going to be our capital asset reserve funds. And then unassigned is, what we consider our spendable fund balance. Again, the city council has a 25% fund balance policy, which you take next year's budget and expense budget for the general fund. You determine what 25% of that number is, and that is what the council has decided to hold in reserve to make in case of emergencies. We did an analysis that was the Government Finance Officers Association put out a basically, these are the things that you want to think about when deciding what percentage of your fund balance you should hold in reserve. And during that analysis, we determined that it should be 25%.
Heather, I'm raising my hand. When we talked about reserve funds at a prior meeting, I had some questions, and I think this would be a good time for me to ask those questions. I think we have a plan policy-wise with the city of developing something that's talking about a more comprehensive look ahead to potential expenditures. Mm-hmm. I think it may have been called part of the biennial package, a comprehensive strategy of reserve funding. Is it reasonable to expect that once that comprehensive look and assessment has been made by the various department heads, that we would reassess our 25% allocation to the reserve fund? I mean, I know I'm not asking you to say yes or no, but is that the direction things could potentially take?
Potentially. I mean, potentially could go anywhere. I wouldn't suggest doing that. The asset reserve funds are separate from the 25%, and the 25% was specifically selected because it looked at, what are your risks for natural disasters? We're on a fault line. We just had a fire.
All kinds of climate stuff. Yeah.
Right. And so there's that. There's, what's your risk for revenue loss in an economic downturn? Ours is fairly limited. We have pretty varied revenue sources. And even when there was an economic downturn and property values decreased sometime in the 2010s, Albany bounced back. Albany's property values and property taxes bounced back far before everyone else's. But there are a handful of other things that go into it, like pension funding and all of that kind of stuff. So I wouldn't suggest changing the 25%. I would suggest finding other ways to save for that, for the assets. Potentially, one way that we currently add to those is if we get rid of an asset, the money from that asset gets placed back in the reserve fund for whatever department it was that got rid of the asset. The fire department, one change that we're going to bring to council to suggest is they bring equipment when they do wildfire deployments, and they're reimbursed from the state for both personnel and equipment costs. And it's going to be suggested that the equipment portion of that reimbursement be put in their reserve fund instead of just going back into the general fund.
That's the exact kind of thing I was thinking of. Yeah.
Yep. So we're trying to come up with things like that because I don't want to touch the 25%. However, if it comes to it and we have to, we could, but that's a one-time solution.
Thank you.
Yep. All right. So then if we keep going, here's a lot of words. Okay, so we go down and we say, this goes into a little bit more detail of how they get to the net position. It talks about our long-term debt. This includes bonds and leases. It talks about, any claims payable. That's any checks that we've written or invoices that we've received for items that, the money's going to go out later. Compensated absences. So if every single employee left today, what vacation would we have to pay out? What, comp time do they have accrued? How much would that cost the city if, again, every single employee left today? And then again, you see our net pension and our OPEB or other post-employment benefit liabilities. So those are our long-term obligations. And so, okay, so these ones are my favorite. These ones are the ones that I look at all the time until I get very excited about numbers. I might be a little dorky, it's fine. So you have your revenues, you have your property taxes, your sales and use taxes, franchise and other taxes. This is set up just like it is on your budget. And I set it up that way on the budget specifically because it's set up like this in the audit. So I wanted you to be able to tie things back together in different reports. This again is broken down by general fund, street and storm, and then all your non-major governmental funds. And you'll see the majority of these are property taxes. And that is because it's your parcel taxes, your Measure M for parks and open space, your advanced life support and emergency medical services taxes, your, what other ones? Sidewalk. There's a handful of them. Library, you have two different library parcel taxes. So that's what all of this is. Your intergovernmental revenues are, when back on this page, we talked about the Alameda County Transportation Commission reports. Most of this intergovernmental revenues is your ACTC, Measure B and BB, roads, pedestrian and bikeway improvement, and paratransit money. Your charges for services in your non-governmental fund. Oh, duh. This is your street and storm drain. You have a street and storm drain. It's NEPEDS. No idea what it stands for. It's a public works thing. It's for street and storm drain. And it is a fee. It is not a tax. It we're in the process of doing another fee study. One hasn't been done in a few years. And so that's your charges for services. It helps fund street and storm drain repairs. And then other revenues, it's a very even number that I feel like I should know where it comes from, but it's anything that doesn't fall into this. And then your expenditures is broken down into general government, which includes most of what you see at City Hall, your administration, finance, HR, economic development, all of your risk. And so risk is insurance, and there's a couple of other things that go in there, like the CERT program. We've moved that from the fire department into risk. So that's your general government. Obviously, it's broken down: police, fire and emergency medical services, community development, and recreation. Capital outlay is any large purchase. Our capital threshold is a $5,000 item. So if there was a purchase of a $5,000 piece of equipment, it's going to be considered a capital outlay. We don't have any debt services in, well, most of our debt is held in other funds, in debt service funds specifically, so you don't see them in the general fund. Trying to remember what this is. Might be the lease on the Public Works Center. That would make sense. And then
Can I ask you a question, Heather,
Sure.
on the capital outlay?
Yeah.
So I'm slightly confused. So those are purchases that would meet or exceed the capital threshold for capitalization as a fixed asset. Is that right?
Correct.
So if we're debiting that as an expenditure here, how does that get on the balance sheet then as a fixed asset?
We have so this is more equipment type stuff that doesn't necessarily make it onto the fixed asset listing. So like this is if we buy like a really beefy computer or a server. That's the word I'm looking for, a server. And, you know, larger IT equipment. I'm trying to think, this is non-governmental funds. This is probably like, where did I go? I went too far. That is a good question. I have to remember.
It sounds like maybe it's more for like long-lived assets that aren't capitalized.
I think so.
Okay.
Yes, that is correct. I'm trying to remember what this is though, because that seems.
It seems really large, doesn't it? For sort of smaller equipment type.
But it could be a number of smaller projects. There's a lot of stuff that Public Works does that it doesn't necessarily increase, like it's not necessarily something we'd add to the asset listing. Our general capitalization threshold is $5,000, and we go through every year and I make my staff pull every line that was over $5,000 so we can analyze it and make like see if it should go onto the fixed asset schedule. I will look into that for you, Kim.
Okay, thanks.
This is our general obligation bonds. Other financing sources, transfers in and transfers out. These are interfund transfers. So for example, our pension tax override fund covers pension expenses in both the closed police and fire pension plan and some current pension numbers. So that would be one transfer into the general fund. In this year, we changed how Public Works does all of their accounting. Previously, they were accounting in all of the special revenue funds, and it was really hard for them to look at one thing and say, okay, here's how much a program costs, because it was so spread out. So we moved it all into the general fund, because I basically said anything that you're going to spend, regardless of where the money comes from, put it in the general fund, because we need to know what it costs to run the city. If all of a sudden, a tax goes away, the expense doesn't go away, just the revenue. So we need to know what the total cost of running the city is. But we can still cover some of that cost with these special revenues. So we do a transfer in to cover. Those are very clearly laid out now in our budgets. So you will see in Public Works maintenance is always the one that I bring up. Their parks maintenance budget. You see transfers in from several different special revenues, Measure M, your parks and open space, your LLAD, your lighting landscaping assessment district transfers in. And it's done on a percentage basis or a not to exceed basis. So basically, council approves every year that we think we're going to cover 25% of our parks maintenance from Measure M. And, I'm just simplifying this a lot, 75% with general fund. So every quarter I go through and I say, what's 25% of our parks maintenance? And I make that transfer from Measure M to say 25%. Now it's capped off at whatever council has appropriated. So if they only appropriate $100,000, but 25% would have been 102, I'm only transferring that $100,000. So whichever is less, the 25% or 100,000. So that's where your transfers in come in. You will see transfers in between multiple funds. And this is where everyone gets confused when we talk about our EMS fund. Every year, we record all ambulance and emergency medical services, or EMS, costs in our EMS fund, which is Fund 1002, if anyone ever needs it. And every year, our expenses exceed the amount raised through the advanced life support, the emergency medical services taxes, and our ambulance fees. So there's a deficit that needs to be covered, and that gets transferred from the general fund to the EMS fund. So we're now recording it not as a transfer out, we're recording it as an expense. We're recording it as a EMS expense to the general fund so that it's, easier and more accurately tracked. But so it's an expense to the general fund and a revenue to, or a transfer into the EMS fund, which is here in your non-major governmental funds. So it comes out of here and into here. And for these ones, it's coming out of here and into here. So I tried to explain it one day. I woke up at like 2 o'clock in the morning and was like, I think I know how to explain it to everyone. Okay. So you have a checking account and a savings account. And you have $50 in each. But you spend $60 that is going to come out of your checking account. You move the $10 from savings to checking to cover it, but you don't say, I had a $60 expense and a $10 expense. You only say, I had a $60 expense. And so that's where it gets confusing when we have these transfers in and transfers out, is it looks like we have a $60 expense and a $10 expense. But we don't really, it's just a movement of that $10. So I've tried to explain that on our budget worksheets and our quarterly updates, but it's still a little tricky. So if people have questions going forward on that, just let me know. But again, it's a lot of just moving money in between special revenue funds. It's not necessarily fully in expense. Does that make
Heather,
sense?
as an example, in looking at the proposed tax or whatever it is for the emergency services that's going to consolidate them. And if I remember right, it was going to raise about $1 million more, and about half of that was going to go to additional staff, but another half of it, 500 something thousand, was going to go to the fund so that the general fund would no longer have to transfer $500,000 in. Is that what you're talking about? That kind of a transfer?
Correct.
Okay.
I think another way that I think about this type of transfers in and transfers out is if you look at the total other financing sources and uses line item, the total on the bottom right is zero. It's a zero-sum game. It's not new revenue or new expenses. It's just an allocating of assets or net fund balances from one bucket to another. And it's a zero-sum game.
I really love that the two people that just like look at numbers all day know exactly what I'm talking about. Yes, I agree with everything that both of you just said. It's still not an easy thing to wrap your head around if it's not something that you look at all the time. So if there are questions, just keep asking them. All right, so we will move on. So this,
I have one question.
sure.
Okay, so there is an unfunded pension liability that we're talking about now. There's a 7% interest payment or, that you have to make. Where is that money coming from in this year? Where is that shown in this balance sheet? And what amount do you think it was?
So that is that's part of this 43.
So it's not shown in the budget.
No.
It's so the revenue and expenditures will show a balance or a budget surplus or a budget deficit, and it transfers and it all balances out. But this is an expense to cover the unfunded pension liability that's not even covered in this
So it's
combined revenue and expenditures.
It's not a cash out expense, which is really what your combined revenues and expenditures is. That 7% just gets wrapped back into this number.
Got it. Okay.
And the combined revenues and expenditures that you're looking at right now are, they're really split out more by city function, I guess you could say, general government, police, fire, as opposed to by their natural expense categories, such as salaries, pension expense, supplies, all of those different types of things. And so it's two different ways of looking at the same expenditures.
And that's why when I present the quarterly updates and in the most recent biennial budget, we have the individual breakdown because you want to know where your money's going. This does not help with that. We have the department level breakdown, and then you have the audit like summary sheet on the top. And so if you add up, the fire and emergency medical services from the budget, it should match, or from the, from the budget, it should match this. Your police department line should match this. The sum of all the bajillion of departments that are general government should match this. The issue comes when we move things. So for example, community development and environmental services previously housed economic development. That was moved to the city administrator, to the city managers, to under the city manager in this year. So in previous years, it'll be in, in this line, and in future years, it's going to be under here. Now, for purposes of budgeting, I move it. I manually make adjustments to show history, because I don't want you to think, oh, well, community development services, their budget went way down, and, the city manager's budget went way up. Well, we really moved an entire function. So I try to maintain that history for the public and for the council, so that we don't have to do that mental calculus on our own. It's just in the documents that I present to you. So oftentimes when there is a discrepancy between what this number says and what your budget sheet says, it's something like that, where I've moved something specifically for a reason, and it's mostly to keep the history for you.
Another question, please?
Yep.
So am I reading it correctly that says that year, 2021, there was a surplus of 2.3 million?
Total, yes.
Okay. And what happened to that 2.3 million?
It goes into fund balance.
So it increased to the general fund?
No.
No. Oh.
The general fund is only the first column. Here, or you're talking about here?
I don't know. I'm just trying to understand so that anyone in the public. So we had a budget and expenses, and we spent, according to this, 2.3 million less than we took in. And I just want to know where that 2.3 million ended up going.
Are you looking at this line under the net changes?
Yeah,
okay.
Where it says total expenditures of 32 million. And
Okay.
then it says excess deficiency of revenue over expenses,
Okay.
2,295,000.
All right.
So I'm just trying to understand so that anyone could understand, is that year we did really, really well?
So I would factor in your transfers in and transfers out before you look at this number. So I would look at this line. And so this ending number is the same. That is correct. But it changes what's in your general fund, what's in your street and storm drain fund, and what's in your special revenue funds. So because we made these transfers out of our special revenue funds and into our general fund, we ended up with a positive $1 million balance. If we had not made those transfers, we would have had a deficit of $2.2 million in our general fund. Now, we added more to our special revenue funds, which are your parcel taxes, so Measure M, and which is your parks and open space, your street and storm drain. Oh no, that one's this one. Your library taxes, things like that. Mm-hmm. Now, that is not necessarily just a woohoo, we have $1.1 million more. That money is budgeted. So oftentimes, so for example, Measure M, parks and open space, there's a plan for how to replace parks, park infrastructure. That's in your capital improvement plan that Public Works puts together. So they have planned out spending that money for like 10 years, right? Because they know that they're going to need to replace the monkey bars. They're going to need to replace, the more tennis courts. I don't even know. So that money is already allocated for things or specifically held in reserve for emergencies. One huge addition in that line, specifically for 2021, was in your library services taxes, because since the library was closed, they weren't charging us. They were charging us, I think, half of their usual contract rate, because they were only open like for to go. And so they weren't really open as much as they had wanted to be. So they only charged us half their contract, and their contract is almost $800,000. So we saved $375,000 in the library services tax fund alone. So there are some gains when you see that, this $1.1 million number, but there are also some things where we're just saving for larger projects. So that is, it's not necessarily, again, woo, we have extra money. It's we very specifically know how much money we need. And when we go to council and ask them to set the tax rates every year, in certain cases, they could go up or down. In certain cases, they can't. It's whatever the voters passed. But we do this analysis to see how much tax do we need in these very specific funding sources.
Okay. I understand, but so can you point to a figure on this page that says, here is the most telling figure that we can use to understand how the budget performed this year during a pandemic, and so then we can compare that year to year?
I would look at this number.
Okay, all right. So I'm going to I got my printout here. I'm going to put a circle around that. And that's I understand. So we had 2.3 on the right side, but you wanted to transfer certain things to different things. So we ended up with a net of $1,079,000. Did that $1,079,000 end up going somewhere?
It increased your ending fund balance. Council appropriated $500,000 of it to make an additional pension payment.
Okay.
And there's some of it that's being held in your fund balance line, specifically to cover the budgeted deficit for 2022.
Carried over. So it's carried over to the next year. So around $500,000 went to pay down the pension, and $500,000 went to carry over to the next year to cover expenses. Does that sound right?
It was, so anything left over here just gets rolled into what we consider fund balance. And then fund balance can be allocated in any number of ways. What we are currently allocating it for is we have the 25% fund balance reserve. We have a this year, no, for 2022, it was a $1.8 million budgeted deficit. We don't think we're going to end up there because we've gotten so much more in the real property transfer taxes than we had in the past and that we budgeted for. But so I don't necessarily think we'll need to use the fund balance to cover a deficit this year, but we also have a budgeted deficit for 2023. So again, fund balance can be used for any number of things, but any surplus, this is considered a surplus when you think about, end of your budgeting,
right?
It just gets rolled into whatever your ending fund balance is.
Heather, what is our general fund reserve? Is it about 7 million?
The 25%?
Yeah.
I think it's 6.8. So yeah, I think somewhere around there. So about 7, yeah. I was just reminded that because council has a special meeting tonight, we need to wrap up by 6:45. And this is a really long report, but these are, like I said before, this is my favorite. The combining statement of revenue, expenditures, and changes in fund balances. And then the statement of net position, that is something that a lot of people look at and ask questions about. So these are two very important schedules. I'm going to kind of brush through the rest of it until we get to the end. Yeah, and then we have the sewer fund, which is our proprietary fund. This one has one column, which is always fun. Then our pension, which, we also have, so this is the assessment district, and then Coordinace's trail fund, which we share responsibility for creek maintenance with Berkeley and UC. And so, but we hold the cash for this fund. But those are the same type of statements for those different sections of the city's finances. And then it just, has some explanation for some of these things. Trying to get to the statistical section. What is this? Talks about our cash and investments. I'm going to skip to the statistical section, which is somewhere down here. There we go. So the statistical section is part of the annual comprehensive financial report, and it has a lot of summary information. So it has our, net position by component for the last 10 years. So you have our governmental activities, and then, boy. Then we have our, expense and program revenues. And it gives 10 years versus above, gave 1 year. What'd I skip? Changes in fund balance for the last 10 years. So you'll see our fund balance has definitely, the change in fund balance has grown or, has changed drastically year to year, depending on what's going on. We have our net assessed property value for the last 10 years. And all of this information is located at the end of the financial reports. Is there any question on that?
I just had a couple of comments because I want to get to one thing about the auditor's communications on other matters at the end, but there is a great chart of the top 25 property tax payers in the city. I think it's on page 135 of this report as the report itself is paginated. So I think you would have to go up a couple pages from where you are.
Breaking everything. Okay.
And I thought that might be sort of interesting for the revenue subcommittee to pay attention to a little bit. One more, I think. Yeah, here we go. So this shows the top 25 taxpayers. Some of these looked like, University Village, maybe the commercial part of that, because I know we were talking about that being a number that was hard to figure out what that number was. But it's,
Yes.
yeah. So anyway, that was just a comment on that.
1100 San Pablo Avenue LLC is Belmont.
Right. And then there's the one right below it is VR University Village, which might be.
That's the commercial. Yes.
So you'll see the, it's property taxpayers. And yeah, it clearly changes from 2012 to 2021 because this was built in 2017. Something like that. Well, this one was built in 2017.
Mhm.
Again, this is property tax because it's the lease holding that is taxable on under not property tax. I can't think of the name of it right now. I'm sorry.
Unsecured property tax.
Yeah, there we go. Unsecured taxes.
So you have a record, or we have any kind of record of what they are paying on those leases that are valued at those 30 million level?
I have the totals. I have to go back through and look. I don't remember off the top of my head what it is.
Okay. I had a question on page 129.
Okay.
The first set of figures, governmental activities from
Yep.
2021, from 2012 to 2021, top line. It
Yep.
shows governmental activities were 3.571 million in 2012, and they've risen to 10 million in 2021. That's like a 200%, they've tripled almost in expenses. And it's significant, and I'm just wondering, is there a way to understand what's the main driver of that increase?
So
It seems to be more than any of the other figures.
Yeah. So one is definitely going to be your pension unfunded liability. That's included under governmental activities. So that's a large amount. I'd have to go back through and see what was included in each of those years. It must have been just movement between certain things, because you'll see that the totals don't necessarily change. They do, but Oh, that's a huge change. What is that?
And in 2017, it was up to 14. In 2018, 14 million, and then it drops down again. So the question is this an aberration or a trend? And another question is, does this have is governmental activities have to do with salaries, staff? Is that also included in there?
This has to be incorrect. I'll have to go back through and look at where they got this number. I didn't put these together. We contracted with someone to put these together. But I also know that 17 and 18 are kind of a mess. So yes, it includes salaries, but this would also include your unfunded pension liability payment.
So 17 and 18 were the years before your arrival, Heather, and were those the years where we had the disclaimer of an audit opinion?
Correct.
I noticed that too. The general government expenses just skyrocket in 17 and 18, and then come down from that, although they're more than they were in 16.
So part of I have to go through and figure out what line everything was on, because I'm not seeing Public Works down here. So Public Works is included in general government. And remember how I talked about how at one point Public Works budget was spread out over every different fund, and then we brought it back into the general fund? That could account for part of this, the jump between 4,000 or 4 million and 7 million. Because if you think about those transfers in, it's about, the 3 million. But there are a couple of other things that are included in that. So I need to go back through and see. I know that that's part of it. I know your unfunded liability has been increasing these years. This, I have no idea what's going on with this. But yeah, there's a handful of things that go into this. Salaries is one, yes, but salaries didn't make this jump this high. That's not possible.
Do you have an idea of what that number might be this coming, in the next 2 cycles or the next cycle?
No, not off the top of my head.
Okay.
So I'm looking at the time. We're at 6:20, and if we need to end at 6:45, maybe we should try to wrap up this piece and move through the next parts of the agenda.
I think that if you do have additional questions, you can always send them to me. But I think that you might also want to wait until the 2022 audit comes out and kind of compare the two documents and see if that maybe answers some of your questions or maybe comes up with more questions. And we will bring that hopefully at your first meeting in 2023.
So I have one that I feel like is important to just bring up. And I want to preface this by saying this is it's such a huge undertaking, and congratulations for getting this done. And thank you for getting this done. And I wanted to ask you about the auditor's communication letter. So it's at the very end. I believe it's page 152 as the report itself is paginated, and they're reporting on internal controls findings. Yes. I wanted to ask you about that. They basically are talking about there were certain reconciliations to the general ledger that were not made between supporting schedules and the GL. And those resulted in audit adjustments. And I was hoping you could talk a little bit about this. I'm just sort of wondering if this was a staffing issue or, what was the cause of that?
Like I said, we talked about when I first got here, we were 2 audits behind. So we had the disclaimer of opinion for 17 and 18. For 2019, we ended with 9 findings. There was an issue with some of our pooled cash. There were a number of issues. Money was coming in and out fine. That wasn't an issue. It was mostly record keeping and cleanup of prior year things. We have gotten it down to where 2021 had 1 finding. So it was kind of a picking and choosing of which was the most important thing to focus on. And I'm not going to lie, the issue of modified accrual journal entries that are done specifically for financial statement purposes and do not matter when money coming in or going out was not on the top of my priority list last year. And that's mostly what it is recording very specific GASB, the General Accounting Standards Board's, adjustments and different things like that. We, fingers crossed, should be fine with all of those this year. We've had people come in and review. There were some issues where in the sewer fund, specifically for our for our proprietary funds, the debt service is expensed instead of put somewhere else. And so we're ready for that. I have a procedure for staff to go in and actually make those journal entries to record the changes so that it's modified accrual instead of expense and all of those fun accounting things. So we should get rid of that finding this year.
Do you feel like this is a staffing issue? Do you feel that you need additional staff to get this done, or is it more just catching up with all of the things that need to be fixed?
It was both. We did get an additional staff in the last year. So we now have a specific accountant position. And that person is going to be, responsible for a lot of the year-end record keeping. And moving forward, they're going to be making sure we're going to close monthly instead of just, annually, and really keep on top of a lot of the things that previously were held until year-end. So I did get an additional staff member that has helped immensely, but most of it was just cleaning up old issues.
Thank you. Thanks for all your work in getting this done.
Thank you.
I just have one final question, Heather, and I want to thank you too, because I think this has been a yeoman's work, and you've done a tremendous job in the last 3-4 years. But my question is a very overview question. We have an auditor. Are they any good? How many auditors in the world are there? Do we trust this report? Are we likely to have a different auditor in the future? That I'm curious about.
Sure. So there are numerous auditing firms. Not all of them do governmental accounting audits. Governmental accounting is its own beast. So you want to make sure that you have someone that has done them before. And this person or this firm, we went out to bid for the first 2019. The first year they audited was 2019. And, they're fine. They had some issues with COVID. Like everyone did, where they had people out, and so they got held back on some work, but they've been very good to work with on my end. And they've, as far as I know, have answered the council's questions when they've presented. So I have had no issues with them. It's just making sure we get the audit out on time this year.
Great. So a couple of things. I know I specifically asked you to put the local ballot measures on the agenda, but I'm feeling like perhaps we should come back to it if we have time, since we have 15 minutes left, 20 minutes left to finish this meeting. And I'm wondering if we should move to item 6.1, which is the unfunded pension liability discussion. What are the
motion for that?
Do we need a motion for?
I have no idea, but I will say that one thing I am going to bring up later when we do the next meeting is I am going to ask for a special meeting for something anyway, so you might move it to that.
Okay, I would make a motion that we move that to a special meeting, and as one of the additional agenda items I want to place is that I think we probably need to move to more than just quarterly meetings to get the work done. So
I'll second your motion, Kim.
Okay.
Well, just so I understand what we're moving, and also just as I mentioned, I didn't get to see the letter from the public that came in. What agenda item was it addressing?
Several. One of the items in the letter referred to we should consider having more meetings.
The letter was in public comment under the agenda. It's there now.
We threw out public comment on the audit.
Okay.
Oh, okay. So we need to do public comment on the audit before we move on. Thank you.
Sorry, we do have one hand.
Okay, so I think it's Jeremiah Pinguello.
Jeremiah, go ahead.
Yeah, thank you. It's Jeremiah Garrett Pinguello, but that's okay. So I was wondering why a lot of those slides, the information was sideways or vertical, or I don't know how you want to explain that, but it's really difficult to read. I mean, this is a city meeting. This is city government. This is professionalism. This is serious business. And you got slides where it's sideways. Now you're turning my neck. I'm over here with the cream in my neck, trying to read this stuff. So it's nice if somehow you can get it in some sort of format to where it's easy to read. I mean, can you imagine an ADA person or someone with disabilities, you know, someone with some sight things over here with their neck sideways trying to watch a public city meeting? It just kind of looks unprofessional, to tell you the truth. So I hope in the future, all these documents are, you know, profile instead of landscape or vice versa. So that's just what my comment is. Just basically, you know, in the future, can we get this a little organized, a little bit better? That way we don't all go home with crinks in our neck from trying to read these documents.
Okay, thank you for your comments. I did note that in the downloaded PDF version of this, the documents come out appropriately, either portrait or landscape orientation, and it could have just been a matter of the particular Acrobat reader that, or something having to do with displaying the screen on Zoom. But if you do refer to the downloadable HTML agenda packet, it's legible. So I guess the next thing we wanted to talk about, moving on, was there any other public comment? Okay, so the next item was a motion to discuss the local ballot measures upcoming in November at a special meeting, date to be determined. And I think we had a second from Member Kerr on that motion.
I thought it was the motion was to have a different meeting, an extra meeting. That's what I thought it was.
Well, we do have to have another meeting. Is that the right time to do this now? Motion to add an additional meeting prior to November, because our next scheduled meeting is November 2nd.
I think it says yes. I saw that was the motion, was to add another meeting. I mean, because to put off the agenda items because it's 6:31.
Right.
So we're not going to be able to do much except for future defer existing agenda items to a later meeting.
This motion will be to move item 5.2 to the next meeting. We'll talk about when we can have a special meeting under next meetings.
Right. So that we can move ahead and discuss item 6.1 right now.
Yes. Do you want me to take a vote?
Yeah. Yes.
Okay.
Please.
So, Member Kerr.
Yes, I vote to support that.
Member Panzer.
Yes.
Member Papalia.
Yes.
Member Priven.
Yes.
And Chair Trainer.
Yes.
Motion passes.
Okay, so then let's move along to discuss.
I think we have to take public comment on that.
Public comment. Okay.
Yeah, there is a public comment.
Okay, so it's Jeremiah Garrett Pinguello.
Thank you, Adam. Thank you, Heather. Thank you. Everything's okay. So I'll be quick. You know, delaying that item to November 2nd to discuss something to be placed on the ballot for an election 6 days later is kind of late. I don't think the timeline works out, because I think that needs to be on the ballot and before that meeting. So to me, it doesn't make any sense at all to procrastinate and delay that specific item. That's something really important we should be discussing right now. Something going on the ballot, you know, for the people to vote on. To me, that takes priority over anything else that we could possibly talk about in this meeting. So moving that to a next meeting, November 2nd, when the election is November 8th, 6 days later, I mean, what are you going to do in that meeting November 2nd? Say, oh yeah, let's go ahead and put it on the ballot. you know, so it just kind of doesn't seem like a good, I wish we had time to discuss it right now. Delaying that just doesn't make any sense to me whatsoever. Thank you for the time.
Thank you. The motion is actually to put it on a special meeting that the date will be determined before November 2nd.
It's also already on the ballot.
And it's on the ballot already.
The council already voted on it. This was just a more detailed understanding of what the thing is.
Okay, so moving on to 6.1. I will, am I allowed to share my screen? Let me share my screen. And, okay, come over here. Well, sorry. I guess I'm sharing my whole screen and I want to just share one. Let me see if that's possible. Let's see here. Oops. Okay, I think I got it now. All right, so can you see my screen for the memo to for unfunded pension liabilities? All right, so I won't reread the whole memo to you, but the purpose of this, Mark Priven and I started some research to better understand the unfunded pension liability issue. It's really complex. The memo basically describes the various plans that we have. There are 9 pension plans the city of Albany has, and the unfunded liability of those plans has been increasing every year due to a number of different reasons. And as of the 6/30/20 actuarial valuation reports, that unfunded liability was about $43 million. This is problematic for the city because the city is already forecasting a deficit budget for the general fund looking out over the next several years. And this unfunded accrued liability for pensions, the payments will increase exponentially over that 10-year period. Looking at a summary that Mark pulled together, these are the various pension plans that the city currently has. And you can see the this column is the main column that you need to look at, the unfunded accrued liability for each of the pension plans. As of the June 30/20 valuation, it was $43 million. We just received an email in the last week from CalPERS disclosing that for the year ended June 30/22, there's a 6% loss on the investment portfolio. So I know that all other factors being equal, the liability is going to go up even more. Also, just as another bit of anecdotal evidence, the single employer unfunded accrued liability alone increased to $10.5 million as of June 30/21. And as of June 30/20, that was sitting at $6.7 million. So there's another $3 million just attributable to that one plan. The single employer plan is the closed plan that closed to new participants, I believe, in 1971. It's a pretty small pool of participants, about 119 former police and fire and possibly city employees. I'm not positive on that, but the point is the unfunded accrued liability is large and continues to increase for a number of reasons. Looking at the unfunded accrued liability over time, here's just a snapshot that Mark pulled from a CalPERS website. The site is quoted somewhere here. I believe this is where it came from. Is that right, Mark? calpers.ca.gov.
Yeah.
So the unfunded accrued liability over time, in 2014, it was 13 million. In 2020, it's 43 million. So that's a really substantial increase. And there are a number of factors for this that I wanted to just discuss briefly. So the discount rate is one of the key factors in determining the liability. The discount rate has been decreased. So this is a rate that CalPERS uses, which is basically an assumption of future investment returns, annual investment returns. So they're projecting they can earn 7% annually, which is a sort of shorthand way of describing the discount rate. The discount rate has been decreased in the past years. I believe it was maybe 8%, and they've been taking it down over time. And there is a proposal to decrease the discount rate even further, because an annual return of 7% is probably too rosy of an outlook. This past year, they returned -6%. So if the discount rate is reduced even further, that means the unfunded accrued liability will go up because they're anticipating a lower investment return. So that's a factor that could increase our UAL, and it probably will be reduced and probably should be reduced. So realistically, we are looking at an increase in the UAL because of the discount rate. Another factor that really dramatically impacted the UAL was CalPERS originally had a 30-year payback period for the unfunded liability on the pension plans, but in 2016, they changed that 30-year payback to a 20-year payback. So shaved off a third of the payback period, so that changed the amortization of that liability and really greatly increased it. And then one of the other major factors is what is the actual performance of the pension plan's investment portfolio. So they're targeting 7%, but actual returns are, of course, varied. And it was -6% for this year that recently ended. So that, of course, that's going to set us back because that's a big gap between what was expected and what was actually earned. So how do all of these things play in? And then as Heather mentioned earlier in this meeting, she also said other things impacted. Who is active, who's retiring, when do the participants die? Obviously that has an impact on the liability. All of these types of things play into it. Looking at the budget going forward. So the city finance staff have prepared projections looking forward 10 years. And the assumption is that the general fund revenue will increase at a rate of about 3% per year. Expenditures will increase between 3 to 4%, expenditures exclusive of the UAL pension payments. So expenditures are already projected to go up a little faster than revenues, but then the big problem is that the UAL pension payments are going to dramatically increase. So I put together this chart to show a projection from 2023 through 32. I should make this a little bit smaller so you can see the whole thing. So the blue line is the percentage in the UAL payment growth. So this is what's going to happen to the UAL payments over the next 10 years. The gray line is the revenue growth percentage. That's a straight line 3% increase. And the orange line is other expenditures, not including the UAL. So those are going up at a bit of a faster rate, and then they start to dip down again in 2030. So this gap in here is our real problem. We're going to have projected deficits, and the UAL payment is going to very quickly increase faster than revenues and faster than the other expenses. So there are several possible remedies, and I think it's going to be a combination of these different things. So obviously we need to explore additional general fund revenue sources, and revenue subcommittee is starting to look at that. So we're really targeting general fund revenues as opposed to funds that are restricted for other specific purposes that we could potentially ask the council to appropriate to make additional UAL payments. Another possibility is issuing pension bonds to cover this liability. This would make sense if we could issue bonds at a rate lower than the 7% assessment that we're charged for our unfunded pension. So it's sort of like refinancing your house at a lower rate. But we could do this bonding and be stuck with this debt, and still the UAL can change from year to year, and we could still find ourselves short, and then we'd still have the pension bond debt. So it's something to look at, but I'm not sure it's really the answer. And then the other item is to really look at the core services that a city provides. And if our general fund expenditures in excess of those core services are too high in light of the revenue that we have and the other payments that we need to make, I think we need to look at cutting back some of the general fund expenditures. I think it's probably going to be a combination of trying to increase revenue and trying to figure out where we can reduce general fund expenditures to be able to meet the deficits that are projected. So we are required to report to the City Council on this pension plan issue, as well as on revenue, our revenue ideas, and a few other things according to the work plan. So this is just meant to kickstart the discussion. So are there specific questions about any of this?
I just want to thank you guys for putting this together. It's such an important topic, and it really it's a short memo, and it's a concise memo, but it really does bring to the front what we need to be grappling with. I agree with Kim that I think it's going to be a combination of all three of the possible solutions and probably other ones that we haven't thought of. But I think we do need to continue this conversation, and we need to have more frequent conversations about this topic. Thanks.
Member Papali?
I concur with what Ms. Kerr said, Member Kerr, and completely. I also want to mention that Chief Bones' letter covered a lot of things that I believe we need to incorporate in our plan. I want to mention that I have never talked with him or met him, even though he mentions me specifically multiple times. I wouldn't even know if I ran into him on the street. But I think it's worth reading his very carefully and thoughtfully response to this issue and to our entire committee, because he has been paying attention. Thank you. Oh, and I know the one thing about concrete metrics that he mentions, that we have to come up with a way to concretely measure the issue and how it can be addressed, and then from year to year, so that we know that progress is being made.
It does feel, particularly with the pension issue, it feels like 2 steps forward, 1 step back, because you allocate additional excess revenues or fund balance, and then something can happen. The expected return is a negative 6%. And then our 500,000 that we're going to put in towards this unfunded liability, well, that's gone, right? Because of the poor investment performance. So that's another issue. Mark, did you want to say anything about that portion of this issue?
Sure. I'm just noting that we're already after 6:45, so I'm not sure how hard that deadline is or time.
The city clerk just texted me.
I'm sorry, I'm jumping in. The council special meeting starts at 7, and to broadcast that meeting, we really need 10 minutes to switch over. So you have a few more minutes to wrap things up. Otherwise, I would need to email all of council and let them know that they'll have to start late, but I don't know what that does to the public. So
Can we just quickly set on a special meeting date in September, early September?
Let's do that. And then that can be where we wrap up your review of the ballot measures and finish up this discussion.
Okay. And do you happen to know if there's anything open the beginning of September? And
I'm looking at it right now. So
are we normally a Wednesday meeting time slot?
normally, yeah.
yeah, but the first Wednesday will be SEJC because it got pushed from a Tuesday because of Monday holiday. I'm looking at the third. The third Tuesday is the only empty slot currently. However, I know council is hoping to start the policing commission on that date. So I'm not sure if that date works. There are other options that you can perhaps start earlier in the afternoon, like a 4 p.m. or something. And then there'll be similarly a hard stop time of 6:45, 6:50.
Could we do 4 p.m. on Tuesday the 20th? Is that sort of, that's the only time frame that works? Or
If it's 4 p.m., it could be other days except for September 8th.
So we could do Wednesday, September 7th. Would 4 p.m. work for people?
yes.
So Wednesday, September 7th at 4 p.m.
Does that work for everyone? Okay, so let's have the special meeting time for Wednesday, September 7th, 4 p.m. We'll put out an agenda that will pick up where we left off with this. And we'll also discuss the possibility of adding some additional meeting times to the regular schedule at that meeting. Okay, any other comments? I think we're only 9 minutes from 7 o'clock, so I think we probably need to wrap this up.
Thank you guys for accommodating
Okay.
the special timing.
All right. Well, thanks everyone. 6:51, and we'll consider this meeting adjourned.